Hello guys, hope today I am on time. It's 10 o'clock. This is the first time I am on time, which is very good. So for today, as you might know guys, the subject is how to sell short in swing trading. Now, this is a new subject that I have never talked about before. Now, the reason for that, because selling short in swing trading, it is good, but it has a lot of risks. Okay, so in this session, since we are speaking, I know some of you guys do selling short in day trading, which is very good. So you can control more. Okay, you can control more because when you sell short, it means you see the candlesticks and you continue looking, watching your trade. If you make money, it's good for you. You stay as long as you are making money, and then you exit at any time you like. And if you begin to lose money, you should have a stop loss to exit. That is in general for day trading. Okay? And for swing trading, it is something more, because you are staying more and more and more. Okay, so it's not the same as day trading. And you can think of selling short, you can think of it as going long, the opposite of going long. It means as you buy a stock and you stay a few days, few weeks, or few months, you can do this thing for a stock when it is going downtrend. So it's the same thing. In general, when you look at an uptrend and a downtrend, okay, they look similar. One is going up, it is called uptrend, and you go long. It means you buy thinking that the stock will be going up. Whatever is the cause, we are not here to search for the reason or cause, because sometimes there is no reason, apparent reason, then some big guys are buying. Now, when the stock, the opposite, in a downtrend, it is a lot of people are selling. It could be a hedge fund. Most of the time, it's a hedge fund. Now, hedge fund, when he sells, or a mutual fund when he sells, it means either ways. Either he has a profit and he wants to sell his shares in order to replace it with another stock, or this stock waiting for 1 year, it was a loss, so he is going to sell it. Understand that mutual funds, they have laws that govern what they do. It means a mutual fund, he cannot do day trading. It means he doesn't buy a stock like swing trader, buy a stock for a few days or 1 month or two, and then he sell it because the stock goes down. No, he should assume his responsibility at least 1 year. Okay, because it is an investment. It is not a trading. Hello Artkov, thank you for coming. Now, another reason, as I told you, a mutual fund is selling is because he wants to get his profits. Let's say he bought it 1 year or 2 years ago and the stock is doing good, and then he decided to replace it. Okay, so he began to sell, and this makes the stock go into a downtrend. because he's selling a lot. That's why the stock will go down. And all the people who are buying, they can't, okay? They can't stop him from selling. Since he is selling more than the buyers, that's why the stock is going down. Okay? Another thing, some big investors, they have an investment and sometimes they change their mind because they see 5 years, 10 years they are with a company and they see that this company is not doing as he expected. So a lot of these guys, big investors, so they sell. Another thing that we can say is that hedge funds finds an opportunity in these companies. So I will explain. Wiseman, hello, Kareem and everybody. Thank you very much for coming. Bakito, thank you very much. No, you are not late. We just begin. We have just 6 minutes. We just begin, which is you are all right. So I'm just at the beginning of the selling short. I didn't begin yet. Thank you very much for coming. Now, some hedge funds are watching the market, are watching the news, are looking at analysts what they say about some companies. If they see a company that it is weak and it has a lot of debt, and they see that the stock is shaking and it's going down, they go, and when they are certain that there is a problem in the company, because they can study it. You can just go to the statement, the company statement and all the filings, and they see what's going on in this company. It has a lot of debts. It has a lot of trouble in management. They are not making enough money to pay interest rate, to pay the employees and the other stuff. So this company is struggling. Whatever is the price is the company. Even if this company is $500, $1,000, $2,000, $5,000, it doesn't matter how big is the company. Because the people, they think a big company will not fall. Yes, it will fall. If things become bad, because investors, traders, hedge funds, mutual funds are the greediest people in the world. Okay? All the people who are in the market are greedy. And they like only the thing that it is good. If something is bad, all they leave. And that's why you see some companies collapse. Now, I will give you an example. I have given an alert on this company. I don't know how many, like 1 month or 2. It's the company that makes ketchup. Because I put the picture with the ketchup thing, because all the people, they know ketchup. It's Heinz, I don't know, it's called Heinz something. I gave an alert like 1 month or 2 months ago. I see that it is going down, and I understand that Warren Buffett, he owns this company. He owns it, means some of this company. But right now, I am not sure if Warren Buffett is still having this company. Maybe he sold it. I don't know. But what I see in the chart, when I see the chart, I don't like it because it's going down, but I like it in another way, because you can sell short it. You can sell short this company. Okay? It doesn't mean that it will go down all the year or 2 years or 3 years or 4 years. It depends on what's going on to this company. Okay? So these are the opportunities in the market, when you see companies that are struggling, that are losing business. Okay, I have shown you before Sears Holding. Now it is out of the market. It goes to bankruptcy. Now, before I told you that it can be going into bankruptcy because the stock was 195, and then it was, I think, last time I saw it, it was $2 or $3. But just last week or this week, I remember, I make a video this week about a stock that was kicked out of the stock market. It is Sears. It doesn't exist in the stock market anymore. It goes bankrupt, and the people who are investing, they lost money, and now it's in OTC. Some other company, they bought Sears. Okay, so when they bought it, it's very good because they buy all these stores, all this chain, very, very cheap. If they know business, they know how to do business, they can make this company good again. Okay? So this is just what I am telling you in general. Now, you can tell yourself, why selling short in swing trading? Why is that? It's just because there are downtrends. There are companies, if you go, for example, you see a company, you follow some companies, but they go down. So when these stocks are going down, instead of becoming sad, you can change your mind and sell it short. If it continues to go down, you will be making money. But understand that most of the beginners, they don't like selling short because first, they don't understand it. Second, it is risky. Third, they don't know how to control such a trade. What you should do in order to control it, and in order not to lose a lot of money if you lose. Okay? So let's see. Pablo Diaz Biesio. I am negative this year of 2 stocks, my third one going down. No problem. No problem. Listen, Pablo. This is normal in swing trading that you lose many stocks. Sometimes it happens to everyone. Sometimes you have successive trades that are bad. Most of the thing is that you are in the wrong stocks. But sometimes the market is volatile. It doesn't trend. And this, that a lot of people, they don't understand. You should understand that sometimes the market is good. I have been telling you guys since 26 December 2018. Each week I say the market is good, the market is good, the market is good, until these 2 or 3 weeks when the market is going down. So if you have bought 2 weeks or 3 weeks ago some stocks, you might lose some money. But understand, in terms of probabilities, 2 or 3 or 5 or 8, even 10 stocks you lose at the row, it's normal. It's not something exceptional because you are in a troubled market. Either you should go and do something else. Since you are going up, you don't find stocks, you should sell short. Or you should use inverse ETFs. When the index is going down, you will be making money. So you should change, you adapt to the situation. You adapt to the situation. It means, I will make it very easy for you. Now we are at the end of spring. We are going to summer. So you are not going to put too much clothes on you. So you wear light clothes, because if you put too much, you will have a lot of sweat and you will become hot. That's very simple. It's called adaptation. Okay? It's called adaptation. If you don't find stocks that are going up a lot and you find the market is going down, try to sell short. But selling short has rules. You should understand the rules before doing this, because it is risky. Okay? Now, Pablo, don't be scared of the market. You are doing the thing right. You buy stock, you think it's going up, it doesn't go up. You have stop loss, you exit. You are doing right. You will succeed whenever you buy one and it goes up, and then you begin to make money, and then you forget all these losses. Okay. Now let's get another question. Alex Stavru. Hello, Alex. How are you? He say, what do you think of Warren Buffett? Listen, there are a lot of things that you don't know about Warren Buffett. Warren Buffett, when he began, how he made all this lot of money. Okay? He is like, he's doing like a pool, like a hedge fund. Now it is called hedge fund and it is very famous. Now what does he do? Or what did he do in the past? In the early years, when he get graduated, what did he do? He trade, I won't say trade, he invests his friends and his family money. And he do like a small hedge fund. It means someone gives him $10,000, someone $5,000, sometimes $50,000. I don't know how much, but he has a lot of accounts. The good thing at that time is that the beginning of the stock market, when it goes so high, this is the beginning in the 50s, 60s. Stocks were $5, $2, $1, 50 cents, $2. They were so cheap and the market was so small. Now, another thing that he did, I don't know if you know it or not, he took 45% of the profits from all his guys that he ran. It means he do the trade, he do the investment. Understand that he become rich is just because of the others, not because of his money. Not because of his money. Because his money, at first, he doesn't have that much. He has little. And when his account losses, he will lose only 4% of the account. It means he is at advantage. It's like the hedge funds right now. It's the same. Okay, for example, you take all the money of the people, you have 10,000. But a lot of people, they give you 1 million. Okay? I give you just an example to understand, because when I give you this example, you will understand very clearly. Okay? Let's say you have $10,000. You ask all your friends in Facebook, in Twitter, in all the friends that you know, or you do advertisement. You say, okay, I will make a hedge fund account, fund. All the people who wants to invest, you come to me. They give you money. And you tell them, okay, each year, if we made a profit, I will take 45% of the money. Understand that 45% is too much money from the whole account. So, because if it is his money, 45% of 10,000, how much is it? Let's say he makes $10,000. He double his money. So you understand he will be making just little. Okay? Let's say it is doubled. He take 45%. It means he's making $4,500 from 10,000. Okay? But since he has 1 million, how much he make? He will make $450,000 that year. So you understand how Warren Buffett becomes big? He becomes big because of his hedge fund accounts. And because he began with the market began at that time in the 50s and 60s. That's why he became too much rich. It's because of this. Okay? And Alex Starvu, here we are speaking about trading and swing trading. Sometimes we speak about investing, but today we are speaking about selling short, which is trading, because Warren Buffett does not sell short. Okay, he doesn't sell the people's shares to do investment, and he doesn't use margin money. So these two things he will not do, and he have never done it. Okay, so we are not speaking about investing here. Okay. Now, let's go to Pablo. He said, Orly lost, BLL lost. Now I am in AIDS, but it goes up, down too much, looks volatile. Okay. So Pablo, you can wait 1 week or two if everything is messed up and you can't make money and you can't sell short and you think it's very dangerous. You just keep your money safe until you find another opportunity. Don't just continue to do it, and you understand that the market is not good. Okay? Free traders say hello. Hello, everybody. So, as we try to continue our session today about selling short, and we said that today I am not going to, we can speak about any kind of selling short, but I'm not going to speak about the day or daily selling short, but we are going to speak about selling short in swing trading. It means if you think that a stock is going down and you see the chart is going down and you understand that it might continue going down because the company has problems, or because analysts say bad about it, or because analysts say that the company has a lot of debts, a lot of competition, a lot of problems, or they have bad management, or they have no earnings or less money, cash flow. It means a lot of troubles. So you can just sell short this company, and if the stock continues to go down, you can make money. So this is in general. When the company is or had trouble in doing business, and this happens always. You find sometimes a company is successful for 10 years. Let's say, try to think about other companies doing cell phones. You will find in the history of cell phones, you find that 10 years ago, 20 years ago, there are companies that are so big selling cell phones and they are very successful, but these companies, they don't sell anymore and they go bankrupt. And other new companies emerge, like Apple, like Samsung, like other companies. They emerge and they took over other companies. So this is normal because technology changes. If a company does not make a lot of research, it changes every time, it will be left behind. And people, they don't wait for losers. For example, you now. I give you an example. Are you going to use an old cell phone, which is not smartphone, which you can't run apps? You don't have Facebook, WhatsApp, Twitter, or any app that you use. You can't use it now because that technology, it is old. Even if they give you the cell phone for free, you will not take it because you don't use it. What do you do with a cell phone that has no internet? What do you do with it? You understand? So these old companies that they make this kind of cell phones, they are dying or they have already died and they go bankrupt. So when a company begins to lose money, the stock will be going down. I give you the example of Sears Holding. It was $195 few years ago. Now it went bankrupt 1 month or 2 months or 3 months ago. It went bankrupt. And just before, in this year, 2019, I told you that Sears and JCPenney are in a bad shape and they might go bankrupt. I have said this in some videos. If you go to the past this year, you will find these videos. So, as always, try always, let's see this. Hope you are, if we have no problem with the picture, it was freezing. Now it's going back. Now, let's go to another question. Alex Stavru, do you swing trade crude oil? No, I am not doing commodities and the other stuff in futures and no, I am in the stock market. It means any kind of stocks in the stock market I will do. Okay, I can buy gold or silver in the stock market. Okay, companies or whatever. But any stock is, if it is good, it is good. Wherever it is, it's industry or its sector. But it should be a company, okay, or an index. It should be in the stock market. It means you can buy it, you can sell it. But crude oil, no. Now, Free Trader said, the mode of the market is bearish because of the tariff issue. No, listen here. Do not always tie stock market with this tariff and this Trump. Trump has said the market is going up. Trump has said the market is going down. This is not always true. You see yourself. Trump has shut down our government, federal government. He has shut down, and the market is going so good in these 5 months. So I don't think that this is a big issue. But the trend has gone for 5 months, 4 months, and 1 week or two, and this Either it could be I didn't check for today, okay? I was selling short, so I don't have time to check anything else than this. So I will just right now we try to see what is the market is doing, and then we come back, okay? So let's go to let's go to the chart. So just give me a minute. Yes, let's go see. Now guys, look. What did I tell you before? I told you before last week. Last week it could be 1, 2, 3, 4, 5. Here. Last week, I told you that if the Dow Jones cross, it means we are going to a downtrend. You see that? We are going to a downtrend. We will never know if it stops and go up again. But right now, it's going down. And it could go down the same as it go up. It could go down. Okay, so Russell 2000, it's the same. The SPY, it is the same. As you can see, it all crosses. So they are doing bad. Silver is doing bad also for a long time. Gold, gold today is good. It goes up. Gold is good, although it was going down. So yes, the market right now is in a downtrend. If it continues like this, if you have some stocks and are going down, if you use the stop loss, it's better to exit. No one knows what will happen next week, but if it continues to go down, you will begin to lose more and more and more and more. So it's better not to be in a situation that each day you lose money. It's better to exit and watch. And for these guys that tells you, if I don't sell, I don't lose, I tell them, whenever you see the big loss, you will understand. Because one day you lose 1%, the other day 2%, the other day 0.5%, one day 5%, and so on. But understand, after 2 weeks, 3 weeks, 5 weeks, you will find that you lost 15%, 20%, 30%, because you don't have the courage to exit on time and to wait and to see if there is other opportunities. Okay? Now, so these 3 weeks, as you can see, the market is going down, and you will see that a lot of your stocks, if you are going long, you will see a lot of losses. Losses because the market is troubled. Okay? Now, another question. Pablo, how is your gold subscription going? Now, the gold subscription, we begin with the end of the trend. I wish E-Trade, I want to do this subscription in the good time. It means when the trend has begun. But at that time, E-Trade has no what we call virtual account. We come at the end, like 3 weeks or 4 weeks. When the trouble begin, I begin with the thing. We lost some money, but I will get the money back in 1 month, 2 months, or 3 months. I will get the money back, and we will be profitable, because this troubled weeks, when you enter and then you lose some money, not big money, but you lose some money. So you should find other stocks that are good and continue to go up. Or in this week, I begin with selling short, and just in 2 days I begin to see money. Okay, so if the stocks continue to go down, we will be making more money until we get our money back, and then we will make the profit. Now, for me, it is a matter of time, because I did this all my life. It means from 2010. So if your account is going down a little bit, 5% to 10%, don't be worried a lot. It's just because of the mood of the market. So you should change your strategy. If things go down, continue to go down, you should find to begin selling short or using puts. Okay? But I have some stocks right now that they are going up and I am making money from them, but they are few. Mostly they are IPOs. The reason for that, because IPOs, they don't follow the market. Even the market is going down, these stocks are going up. So I have, I think, 1 or 2 or 3 stocks in the portfolio that are doing well, although the whole market is bad. Now, for 2 days ago, I began to sell short, and I begin to see results in the second day or the third day. I think I bought them on Wednesday, or I think on Wednesday or Thursday. I think Wednesday. Okay. Yes, on Wednesday I bought them. So I have 2 days, Thursday and Friday. Now, when I see the thing, I begin to make money, and this is very good, because you see that other people are crying because everything is going down, especially when you are investing. Now, for my portfolio of investing, I left it as it is. I didn't touch it. I bought 7 stocks. Even if I lose money, it doesn't matter, because this is an investment. It is for 2 years or 3 years or 5 years, 10 years. So I will not change it. Okay? So this is an investment. But for trading, it's different. You should change your strategy according to the mood of the market. 010 Ardam. Hi Karim. Hi everybody. Thank you very much for coming. And thank you all of you guys who are coming and who are asking questions. Now, Prince Singh, how are you, Prince? I haven't seen you for a long time. He say, how are you, how are you, sir? Thank you very much. I'm very good with all the guys here. Alex Stavru said, do you think there will be a recession next year, and how do you think it will affect stocks? Okay. Alex, I don't forecast things. I am a trader. Now, since I am a trader, I see the chart and I see signals. If a stock is going up, I will buy it and think that the stock will go up for a few days, few weeks, or few months ahead. Now, it doesn't mean I am sure 100% that the stock will go up, but I am certain that the signal is good and no one can guarantee the future. Now, if you bought a stock and it doesn't go up and it goes down, what do? You just sell it. Because you bought it, the stock, you're thinking that it is going up, but it didn't go up, it go down. So you begin to lose money. In swing trading, like in day trading, if you lose money before you buy the stock, you should know where to exit as a stop loss. You should know. Okay? You should put stop loss, because putting a stop loss will save your principal. Yes, you lose little money. Yes, it's part of the game, because you risk your money to make money. But some people, what they do, when they lose, they leave their stock thinking that the stock will come back. Some stocks will never come back. And you will never know where it goes. Let's say a stock is 50. It goes to $30. Okay? And then from 30, it goes to 40. But still, you will never know where it goes down. You will never know. The company, maybe it has troubles. Maybe mutual funds, they know that the company is doing bad. So they begin to sell their shares, until you lose all your money. So here we are not doing investing, we are doing trading. Trading is you attempt to buy or sell short. Now, if you succeed, you stay, because you will be making more money, more and more money, because if the trend continues. Okay? So this is why we do trading. Now, and about the recession, listen, always when you think about the recession, think about yourself. Don't think about the other people. Now, let's say you have a friend who is a doctor. He is making $250,000 a year. The recession comes or doesn't come, he will be making his $250,000. Okay? So always think about yourself. Don't think about the economy as if you own billions of dollars and you are worrying about the global change and business relations or international thing. No, don't think like that. Don't think about something bad coming and it didn't come yet. So if you think it's coming, you should prepare yourself whatever you think is right for you. Okay? So, but for me, I don't have this idea. If there is a recession, we sell short stocks and we will be making money. So it's good for us also. Who cares? Who cares about this recession? Recession is for some people who have some small jobs and they scared about their jobs, they lose their jobs, like what did happen in 2008. Okay? So if things can happen, you can't change it. You should change the job or change whatever you want to do. Thank you, Alex, for your questions. Side of the truth said TLT is going up. I will check it for you, guy. And thank you, Side of Truth, for coming and asking questions. So let's go and see this stock. Okay. Now, this is iShares Barclays 20 plus year treasury bond. This is a bond ETF. Okay? It's bond as formed as an ETF. So this is not a company. This is bond. A bond fund. It was like 127, 131. If you like this kind of ETFs, you can buy them. But this is a bond. ETF. It's an ETF. It is like a stock. You can go long. You can sell short. It is an ETF. Yes. Okay. Doji dude. Hello, my friend. Thank you very much for coming. Doji dude. Let's get to business. To businesses, Djellala. We are into business, man. We are into business. Now, since I began with this, so you say, so it's a bunch of stocks, ETF. No. ETF, it is not. Yes, but this what I show right now. It is like a stock, but it tracks a bond. It's not a company. It's a bond. Okay? So it's not stocks. So an ETF, it is a stock that tracks something. It could be anything. It could be a stock, it could be bonds, it could be options, it could be futures, it could be cryptocurrencies. It is just something that tracks something else. Yes. But for you guys, an ETF, it is like a stock. It means you can buy it, you can buy long, you can sell short, and it has shares. But understand that it tracks bond. So you should always understand what the ETF is tracking. Because sometimes it tracks something which is dangerous. I'm telling you. There is one guy before, he was here in our live chat, in our live session. He lost 90% of his money in one night. 90%. Do you understand what I mean? He has $12,000. What is left is only 1,500 or 2,000 or. Now, what is the problem? I will explain the problem right now. At least you guys, whenever you see a fund at the end, or you see an ETF, understand that it could be something dangerous. So you go online to Google, you put the name of the ETF or the fund, and you see what is this thing that the ETF is tracking. Okay? So I will just explain very quickly. Okay. Now, let's explain. Now, here is the ETF, as you can see. ETF, it is a stock. A stock, it means it has shares. It has shares. And you can go long. It means you buy thinking that the stock is going up, or you sell short. It's as normal as any stock. Now, the most important thing, you should see what does this ETF, which is an exchange traded fund. Now, why you say exchange traded fund? Because you can trade it. It is a fund it means a lot of money together. Traded, it means you can buy and sell in the day. It's not like mutual fund. Mutual fund, you can buy it or sell it or trade it after 4 o'clock. Okay, so you can't trade it in the morning as the stocks are moving. So all the stocks should stop trading at 4 p.m. and after p.m. you can sell, you can buy, you can do whatever. Now, in ETF, it could be an index of stocks. Okay, let's say the Dow Jones. Dow Jones is an index of stocks, and the ETF is called DIA, as I have shown you. So when you say Dow Jones, DIA, it means that it is an index of stocks. But it could be options. It could be futures. It could be bonds. It could be cryptocurrency. So what is the most dangerous? Options are very dangerous. Futures, bonds is less. Cryptocurrencies are very, very dangerous. Those you can lose all your money, especially options and futures, especially those two. Because options and futures, they move too much and the risk is 100%. In futures, you can wipe out your account in few minutes or few hours. Options also, you can wipe all your account. Whatever millions you have, if you put millions of dollars into options and you have a gap up or a gap down, you can lose it all in one night. All what you put. So be careful of options, futures, and cryptocurrencies as ETFs. So whenever you see a name like an ETF, it's not a company. You go to Google and you look what it tracks, because it will tell you what it tracks. It means what's it stand for, this ETF. Okay? So one guy, I told you about this story before, and he comes to the session. He said he has 12 grand in the next night, like $1,500 or $2,000 left from his money. Now I asked him, I said, is this a stock? He said, yes, it is a stock. I thought it was like a gap down. It happens in stocks, a gap down. But when we see, I find it is an ETF, and this ETF tracks futures. He doesn't know even what is futures. And I ask him, do you know what this ETF is tracking? He say, no. I say, why you don't see before? Because ignorance is your enemy. When you don't know something and you trade it, it's the worst you can do when you don't know something and you begin just to trade without knowing what you are trading. Futures are very, very dangerous. The people who do futures are professional traders and they have a lot of money, so they know how to handle this future thing. People lose millions of dollars sometimes because of big losses. So it's not easy. Okay? So always when you find an ETF or you find something like fund at the end of the stock, you find fund, you should go and check on Google what is this and what it tracks for. Okay? So these guys, because this is the problem in stock market, sometimes you do something and you are not sure how to handle it, or you don't know even what is it, as this guy does. Okay? Okay. Doji Dude said, yes, lots of great traders went from rags to riches, to rags and then riches again, up and down, like sex, even sideways. Listen, yes, but there are some people who do what we call kamikaze trading. It means you have some money and you enter to a trade and you say, well, either I make it or I lose it. It's like gambling. Some people, once in a while, he succeeded. Okay? But understand that the market, it gives you sometimes a chance to make money. But if you play a lot, he will take the money and you go bankrupt. And this is what happened to a lot of traders in the past. Even the biggest traders have this attitude. They like risk. They like to do risky things. So sometimes they make a lot of money and sometimes they lose it all and they go bankrupt. Yes, this is true. Nastina Lucci. Hello everyone. Bonsoir Karim. I am a bit late, but I am here. Okay. I understand. You come late and you say, I am here. Yes. That's good. You are late 57 minutes. You should pay for this. Okay. Doji Dude, yeah, buy a hammer far away from the 200 MVA or 20 MVA. Oh, okay. See, I don't use this moving averages, and it is used in investing. I don't use it. And this moving average is 200 or 20. Whatever the stock change, it will change. So it's, for me, it is useless. For you, it is good. For me, I don't use it and I don't care about it. I don't use volume also. So you bring another thing. I don't use it. I don't use moving average. I don't use volume, and I don't use indicators. So do not talk about all these three. I don't use them and I don't talk about them. Okay? Now, let's so you say all we have are ways good and bad. Yes, but for me, I don't use them. No problem. Okay. Let's continue our session about Alex Starvru said, have you ever worked in finance? No. Yes, I have read books like knowledge, and I am good at money and calculations. That's why I do trading. Okay? I'm good at it. But I didn't do education, like degree or having education. No, I didn't do that. Because if you do that, you will never be a trader. Believe it or not. Because they stop you with their ideas to grow and to find ways to make money in stocks. Okay? They will give you bonds and interest rate like the banks do. But we are not banks. Okay? We like risk. Banks, they don't like risk. They play with the money of the other and they don't like risk. So traders like risk. Now, side of the truth said, I am short TSLA, Tesla, down to 178. This is the people I want to talk to, because this is what I am talking about today, which is selling short in swing trading. So Tesla 178, let me see. So let me see. Why do you say 178? Are you sure what you are saying? Side of truth. You say, I am short Tesla down to 178. But when do you begin shorting Tesla? Because now it is 185. It is now 185, 16. Okay? Doji, dude, I like to see your strategy. So you can go to my website and you see from training level 2 to training level 11. You can see how I trade by training, either by videos or ebooks. You can check that. Or if you have questions, just send me an email later. This is my website. You can ask questions when we finish. Or you can send me an email later. Now, okay. So, side of truth, please. What do you mean 178? When did you begin? At least I will. Why should I? You bought puts 3-year chart. Listen, side of truth. If you bought puts, you tell me which date, not which price, which date. At least I see when do you buy. 3 years ago? When you say 3-year chart, you have puts for 3 years? And you are going down and the stock is going up? How's that? Explain more, side of truth. At least I will check what you are saying. At least I will not keep the chart. If you are not giving me information, I could just go and see someone else for other information. Okay? When you get me the information, I will go back to you. Okay? Because I don't understand what you say. Okay. Yes, but listen. You say the 178 low on 3-year chart. Why should I go back? You should tell me what is the strike and how long. When did you buy? Did you buy it 3 years ago? Do you have a put for 3 years ago? For 3 years? I don't know. I have never seen that. Okay, no problem. let's continue. Honorable, thank you very much for coming. Hello, CMG today, not short. CMG, let's see CMG. CMG today. Wow. See this small candlestick? It is $18. Small candlestick like this. Be careful with this CMG, this Chipotle Mexican stock. $727 is a big stock. Okay, let's go back. So let's go back for this thing. Now, Ochen Ardam said, Doji, you talk too much. Let's get him talk. Thank you very much. No, I will try to answer all of you guys, whatever you ask, and one by one. Yes, but be careful. I'm telling you. Try to be careful with big stocks. They can move too much. Okay? Now, when you are going to sell short, you should see stocks that show weakness and continues going down. Now, for me, I'm not going to give you the strategy exactly how to scan for stocks and how to find these stocks. I will do for the weekend. I will do for my subscribers, to golden and silver subscribers. I will explain into lessons and I will show you. I'll show them. But for you guys, you should find weak stocks. This, you can find them by scanning, which is very, very good. Daily scanning, you find this kind of stocks. It's like going long, you can find stocks. Going down, you find these stocks. And understand that these days, these 3 weeks, there are a lot of stocks that go too much down. And this is the opportunity to make money from selling short. 3 days ago, on Wednesday, I began to sell short in the portfolio, and we begin to see money in 2 days. Okay, so this is one of the things that you should focus on. And as I explained before, you don't have to see the company fundamentals. It means you don't have to go and study the company and see why it is going down. And this is just a trading. You follow the trend. And it is very, very easy. You are not going to stay 1 year or 2 years or 3 years with a company and you study that this company is losing money. If you do this, it is called position trading. Now, position trading is what? Position trading, if you want to sell short, is you study the company. So you have fundamentals with a chart. So you have two things. You use fundamentals to select some companies that you know that are doing bad. You study them and you know that they are in trouble. The stock is going down for 1 year or two or whatever. And then you decide to make a long position, either if the stock is going up, but in this case, the stock is going down because the company is losing money. Now this you can stay 1 year, 2 years, 3 years. A stock that it is 100, it will not go into $20 next day or next week or next month. It can take 1 year or 2 years until it goes down. So the more it goes down, the more you make money. So this is what I'm speaking about in selling shorts. It means you should follow the downtrend. This is the basic thing. Now, it doesn't mean that when you sell short, you should stay 1 year, 2 or 3. You can stay a few days, few weeks, few months. Whenever the stock is continuing to go down, you will be making money, so you hold on. So this is the rule number 1. Okay? Rule number 1, you should find a downtrend, something that it is going down. And when you see a downtrend, you think that the stock can continue to go down for weeks, for 1 month, 2 months, 6 months, 1 year, 2 years. Why not? If the stock is going down, you will be making money. So this is the first thing you should see. So let's before we go down, I see Doji, CMCT. I think I have seen this stock. Listen, stocks that have zero volume, moving average, the average is 3,000. 3,000 shares, 21. This stock has no money. It means you can check the bid and the ask. Sometimes it is zero, which means the whole day no one buys, no one sells. This is a rate. Real estate investing company. It's too small. I don't trade stocks that are zero volume, like here, zero volume. 600 shares, 400 shares, 0 shares a day. No. So I'm not going to see that, because I don't trade stocks that have no volume. It's dangerous. Because how many shares you will buy if a day no one buys, no one sells? The bid and the ask should be too much. So I will not play this game with zero volume. Okay? So be careful, man, Doji dude, with these stocks. Okay. Honorable B said short weak stocks in weak sectors. Yes. Honorable B, there are some stocks. This is a training level 3, when you can check stocks and you check the indexes and you see which are the bad or the good. It's okay. Honorable Bis said many traders short the indices directly. Oh no, listen. Try to understand something. Honorable Bis, we don't short an index as it is. We don't. So an index, most of the indexes has an ETF. It means it go long. It tracks the index. And it has sometimes an inverse ETFs. It means doing the opposite. So 2 ETFs. But the index, you can't do nothing to the index. The index, we don't short and we don't sell and we don't buy the index. The index is just an index. It's a benchmark. Like when you see Dow Jones, it is let's say $25,000. It is just the benchmark. You can't buy it, you can sell it. If you want to buy going long, you should find the ETF, which is called the DIA. Okay? So this, at least you have an idea about indexes. We don't buy directly an index. Dow Jones, S&P 500, Russell, or any other index, we don't. But we can buy the ETFs, the ETF that tracks the index. Doji Dude say, I want the meat in the middle, not support or resistance. The meat part in the middle, the big move. But listen, you have a flu idea about the support and resistance line. Support and resistance line, there are hundreds. Each move, it could be a resistance line or support line. So maybe you are wrong. You are thinking maybe of the high and the low of the year. It could be too much, but no one is doing that. Okay? Now, Doji said, volume you don't use or count. You said, thank you, brother. Now, I don't use volume in my trading. If it is big or it is small, I don't use it. It means it's not because the stock has a high volume, I buy it. No. It could be has little volume, I can buy it. But I don't buy zero volume or volume that the bid and the ask is too much. If you don't know what is bid and ask, you are doing something wrong. You should understand that volume has a relation with the bid and ask. The volume is only the activity of the traders in that stock. You should have a minimum that makes the stock liquid. Okay? You can buy, you can sell. But if there is no one who wants to buy or sell and you want to sell, what did happen? They give you a bad bid and you lose a lot of money if you exit like that. That's why these stocks are not good. Okay? And who goes to a stock that in the whole day 100 shares is sold? Who will go to that stock? It's stupid. No one is going to that stock. Okay? Pablo said, because you can get stuck and bid and ask too wide. Yes, you can get stuck. It's very important. Doji, I like to see volume 1 million. It's not 1 million. It could be 50,000, 100, 200. You should check the bid and the ask. Don't look too much at the volume. The volume is just, it gives you general idea. For me, when I see the volume, it just gives me the general idea, but I don't buy and sell until I see the bid and the ask. This is too much important for me to see the bid and the ask. The volume, sometimes it's not a good indicator. Sometimes it is 1 million, but the stock is 50 cents. So 1 million with 50 cents, it's not that good. So don't focus on the volume, focus on the bid and the ask. That's it. Honorable Beast said, I mean like the SPY ETF can be shorted? Yes, because the SPY is the ETF that attracts Standard & Poor's 500. So Standard & Poor's 500 index, it is not the same as the ETF. The ETF is a stock, but Standard & Poor's index, it is an index. So you should make the difference. Okay? Just make the difference. And the ETF, you can buy long, you can sell short. It's like any stock. It's the same as a stock. But the index, it is something else. An index, you cannot buy, you cannot sell. It is just a benchmark. Okay? So don't confuse ETFs with indexes. Okay? Now, inverse ETF, if you don't want to sell short, you can use an inverse ETF. Because selling short, you should have a margin account. Inverse ETF, you don't need margin account. So this information maybe you don't know, so I'm just telling you right now. Okay? Now, since I am speaking about this selling short, now the second thing I will tell you is that you should need a margin account. Okay? Because in a cash account, you can't sell short. You need the money of the broker. So, if you have $10,000, the broker will give you another $10,000. It becomes $20,000. So, if you use your 10,000 and you want to use 10,000 of your broker, you should pay interest rate when it is in swing trading. It means overnight. You should pay interest rate, so you should be cautious about this. And interest rates are so high, although it doesn't show that much. But I see now 6%, 7%, 8%, 10%, even 11%. I see it in some brokers. Before, like 3 years ago in Options House, it was only 1.99%. Believe it or not, 1.99%. It was the cheapest in the market. Options House was one of the best brokers, but unfortunately, it was bought by E-Trade. When they bought it, they changed everything. Okay? Alex Starview said, GameStop, GME, good short. Let's see. I see it before, I think. Man, see? It was 15, it was here 1690. We have a gap down and then it collapsed. Yes, you should look for these kind of trends that are going down. Okay? Yes, it's very good. Roku near all-time high. I didn't see Roku for a long time. It's good. It's doing good. 26 December. Yes. It's doing the same as the market. But the good thing, it has a gap up and continues to go up. And the market now is going down. And Roku is going up, so it's very good. Now, Hazelhan, I have a question. Listen, guys, whenever you have a question, just ask. Don't tell me I have a question. Just ask questions. No problem. Where is his question? Okay. Let's see. Honorable said, be careful shorting stocks with a big spread. Yes. Try to be careful of illiquid stocks. It means the stocks with low volume, like penny stocks, like stocks that have penny stocks, because they are manipulated. You can lose a lot of money if there is a reverse of the trend. So be careful of that. Now, Hazelhand said, I buy 4,000 shares of a stock that sells at 10 cents a share and it goes up to 50 cents a share. Will I make a profit? Yes. You will make 5 times your money, and this is very, very good. Now, what is this stock? This is a penny stock. So, wherever the stock goes up, you will be making money according to the shares. So, what you should do, you just multiply 4,000 by 50. It's 50 cents. Okay? So you will make $2,000. It means you have, I think you have put $400 and you make 2,000. Yes, but this will not be always. And sometimes you put 2,000 and if it goes down, you will lose all your money. So be careful of penny stocks. It's a big manipulation. Even if you make money, it will not be always. Okay, so be careful of this. If you have made money, just don't do the games a lot, because penny stocks are so dangerous. Doji Dude said, yes, very clear. Yeah, buy off support and if a good fib number of resistance round numbers are good to play also. Now listen, I don't, I have my own strategies that are very fixed and very precise. I don't just play like this. I don't. Doji said, I like the ITR. I don't like it. S&P 500. Ali Invest missed the party on GMs. Shorting Roku. Yes, stocks. The only thing I will tell you at the end of this session, although we have 31 minutes left, but I will tell you something very, very important. You should all know about it when you sell short. Is that avoid penny stocks. Okay? Penny stocks, avoid them. Because if you sell us a penny stock, it's going down, and then next day it goes, it doubled or tripled, or you will lose all your money, and the broker will call you. You will have a margin call, and you will be in trouble. Whatever you put, even if you put 1,000, and the stock goes up, double, from $1 to $2 or $3 or $4, you will be in a real trouble. So do not play with penny stocks. Now, second, a normal stock, you should always think about the earnings. You should always exit before the earnings. You will never know what will happen. I see some stocks that are going down for 1 year, and then we have a big gap up. So you can lose a lot of money. So it's better safe than sorry. There are things that you should know. You should know the risk, because risk in selling short is not the same as going long. The risk in selling short is unlimited. A stock can go down from $2 to $1, but from $1 it can go to $10, $20 a day. So this game of selling short, in my opinion, if you want to do selling short, you do it in the day and you exit in the day. Don't leave anything to tomorrow. Okay? Because penny stocks are manipulated. Any stock, whatever is going down, it can go up so badly. And you can lose a lot of money. So try not to gamble with your money. You can make money one day, but next day you will regret it that you enter that trade. Because manipulators, they can go up or down as they like. Okay? And it depends where you are. If you are in the good side, you will be making money. But what if you are in the bad side? You are selling short, and next morning it was $1, you find it is $10. What do? You go bankrupt, and the broker will call you, and you have to be in court soon. So selling short is not for the beginners. If you are a beginner, buy only a few shares, 1 or 2 or 3 shares, just to try. Try to see all the risks that you have in selling short. At least if you do a mistake, you are not going to lose a lot of money. It's not you come with all your money and you want to do a selling short in a stock for your first time and you put too much money. This is a big mistake. There are a lot of things you can discover by trading. Okay? Okay. Olympic said you only pay interest on the short position if you use margin. If you short and have enough funds to cover the whole short, no interest. No interest amount. Oh yes. But any money that you borrow from the broker, you should pay interest rate. Okay? If it is your money, you don't, because it is covered by your money. But here we are speaking about the broker's money, not your money. Okay? So, Ulta, how would you trade it now? Today, it has like a gap up. It was going down, then it goes up. So there is something going on. Now, how I trade it? I don't think that I will trade this stock. Here it has a gap up. Here it has like a gap down because it goes so much down. And it is 333. It's a big stock. Okay, let's go. Would you short low? You mean lows? Or low? Yes, low. The best trend is when it is leaning. Okay, that's here. When it is leaning, I don't like things that are vertical. Vertical, it can go down too much and it can go up too much. So it's very hard. And these days, the market is troubled in these 2 or 3 weeks. So I will not going to touch this. So in my strategies, I don't like this kind of stocks. Okay. Doji dude say took the drop, $12 profit per share. Sweet and versatile when it comes to load up my toolbox. I like to jump on the ride $1 to $20. Yes, okay. So Hazelhand said, yes, a penny stock. Stock Heb is one of them. I haven't tried it, but I just wanted to ask. The lowest is 10 and the highest is 25. 60 and it is constant. I think I have seen. So this is, as you can see, a penny stock, and as you can see, the chart is not that good, and it can be manipulated like here, like here. I don't think that this is earnings because it's just manipulation, and I don't work like this kind of stocks. So try to avoid this kind of stocks. You might lose your shirt in them because they are manipulated. Okay? So there is a lot of play. It's not a normal trading. If you go to a big stock, you find big mutual funds, they are selling, we have a sell-off, we have hedge funds, you see the stock going down for many days, many months. So you can make money and the thing is stable. But in penny stocks, today is going down, tomorrow is going up too much. So if you sell short, or you can lose your shirt. So try to be cautious about this. Okay. O10 Doji dude, I'm not here for your opinion. I am just to listen. Jalal, please be quiet as well. Okay, no problem. Be nice short today, no. And dude, I look for it to fill the gap to upside. Tell that to Pinedon Snowflake. Also known as... Oh, listen, Doji. Stop speaking about other people and I will take this off. I don't want to that you are speaking about people here. I don't like that. So stay with the subject of today. Don't bring people here, okay? Okay. So if you continue, Doji, I will try. Ah, yes. But I see that you begin to put stuff in the chat that it is advertising for people. So please do not speak about other people's here. So that's it. And don't expose your strategies because people are not, they are not here for you guys. Okay, so just listen, ask questions, and let me answer. Okay, if you are here to listen, so don't try too much and don't speak about other people. Now it is 1 hour 41 minutes. Okay, so 1 hour 41 minutes. We will finish by 2 hours, so we have 19 minutes. So I will just continue speaking about selling short. Selling short is not for beginners. Understand that. If you want to begin, you should first learn how to sell short. For me, I have only one for day trading, training level 11. It is about selling short and how to sell short, the risk and everything. But for swing trading, I didn't make a training. So maybe this month in June, maybe in June this month, next month, I will be making a training about that. Because there are a lot of details that you should know. And there are risky things happening, especially in penny stocks. There are things that you should be aware of, like earning news. Things can change very quick. And if you don't put stop loss, if you are not aware of things, you can lose a lot of money. Even with the stop loss, you can lose a lot of money. For example, earnings. Understand that some stocks, they can go for 1 month, 2 months, 6 months, 3 months. And then the earnings come. And they make good earning gap up. Do you understand that even if you stay 1 month or 2 months making money, all this money maybe go in the wind? Because of the gap up kills all your profits and maybe your principal. Penny stocks are very dangerous. And if you do a mistake, if you are squeezed in a mistake, you can be in debt. And this is more dangerous than going long. For example, let's say, I will give you an example to understand that it is very dangerous. It's not as you might think. Let's say the stock is going down. It was $5. Now it is $1. You short it on $1. And let's say you put $10,000 shorting this stock. And you say this is the opportunity to make a lot of money. Unfortunately, the next day, there is one guy, manipulator. He asks people to buy the stock. So the stock is doubled. It's $2. Now, what will happen to you with your $10,000? First, your $10,000 is lost. Okay? Is lost. Second, you need to bring 10,000 to the broker. So he called you in the morning. He sent you an email and he calls you by your number, and maybe they send you a letter, an express letter that comes the day or the night. He said to you, you have lost $10,000. You have lost $20,000 and we need our 10,000 right now. Because you are losing the money of the broker, and the broker, he is not here to lose money. It's your problem. If you don't have 10,000, you should sell your car, you sell your wife or your girlfriend, or you sell your home, or you tap into your 401k, or whatever you want. Understand that some people, because they don't know how to sell short, they are in a very big trouble. So don't play the fool in the market, because the market will punish you, especially these dangerous things. Now, when you do, for example, going long, you can lose all your money. For example, you have $10,000, you are investing in a company, and then it goes bankrupt, like Sears, for example. So what will happen? You lose all your money, which is okay. But the problem is in selling short, you can lose the broker money. And the broker will ask you to bring the money right now. That is the big problem I'm speaking today, and I'm trying to explain how to sell short. You should get a training. You should not just go ahead and they tell you, oh, it's easy, just do this and this. But if you get trapped in a problem, no one will help you, because you lose your money, you lose other people's money, like broker money, and you face problems with the court. Okay, so try to understand this. Okay, now Wiseman said, isn't way too dangerous to short during swing trading compared to day trading and shorting? Yes. Swing trading is more dangerous than day trading, because in day trading you see the stock, you see the price, and you can't stop it at any time. You go by market order and you sell it. But when you buy today and in the afternoon something happened, you can't exit the trade 7 o'clock, 8 o'clock, and at night you go from work and you look at your stock and you see that you lost $10,000 or $20,000. So it's over. No one will help you. No one will get your money back. It's over. You do a dangerous thing and you don't know what to do. Now, Ugandan Knuckles. Hello Kareem, how are you? For example, if you put $5,000 in margin account, can you short using only your 5,000? Yes. Listen, you don't have to use all your money and your broker. You can use only your money. Okay? Don't use, let's say you have, in your account you have 10,000. Because 5,000 is yours, 5,000 is broker. Okay? It is broker money. So you can use only your 5,000 and you are okay. Okay? Yes. Side of the Truth said, the market goes down faster than it goes up. Right? Yes. The reason for that is that when the stock is going down, we have two actions. We have people who are selling their shares. It is they own their shares. And you have short sellers. So we have two actions. That's why the stock goes down quicker. Yes. Hazel Han said, I am excited to watch your next level show on here. I am always learning something new from you. Thank you. Thank you very much, Hazel Han. Hazel, you can watch my videos. I do a daily video on the channel. Or you can, in the future, if you are interested, you can subscribe to silver or to golden subscription, and you will see the portfolio, you will see what we are doing, you see the lessons, and you will see everything. Because understand that here in this training live session, I am just giving you generalities about the subject. I am not giving the full training. The full training is for my subscribers in the golden subscription or silver subscription. Okay. Now, Wiseman said, can you use mad money when shorting? Mad money as in money you can afford to lose without using all of your capital. I don't know what do you mean by mad money, but if it is your money, it is your money, mad or not. I don't say why you say mad money. If it is your money, if you put, for example, $5,000 or $10,000 to try things as an experiment, yes, it's for your training. You lose, you make money, you don't care, yes. But I thought that mad money, it is from some people who give you your money and you play with it without any responsibility. I told you, if you know these people, send me some money from them. I will play also. Okay. Okay. Ugandan Knuckles said, if you are using only your money in margin account, then there will be no interest charged by broker. Yes, I think so. I think so. You don't. Okay. Vincent NCYC. Hello, teacher. Long time to see you. How are you? Hey, Vincent. You come late. I don't know where you are these weeks, but you don't come. We missed you. So, Honorable BBC say, I only short using my funds, never borrow to avoid interest. Yes, it's very good thing. It's very good thing not to use the broker's money. Okay? That is a good thing. Vincent said, I have been doing well, even though the stock market has been going down. By using your strategy, I was able to pick the best stocks to trade. I bought Okta yesterday before earnings, and it pops. Okta? I don't know this Okta thing. There is no. I don't see any gap up in Okta. Is it Okta that you say? OKTA? It goes only, or it is. Let me see. Let me see Okta in the thing. Oh, you bought it. You mean you bought it on Thursday? Oh, you mean you bought it on Thursday? 6.62. But understand. Listen. You should follow the 26th December. This is the good thing. It's from here. This is the good thing, the trend. Now you get. It's not good to see the earnings and you buy it, because it can go up, it can go down. So this is a very risky thing. Okay. So understand that I in general, I don't buy because of the news. The stock that I bought already many weeks or many months before. I follow the trend. And then if I have a gap up or gap down, it doesn't matter too much. If there is a gap up, I will be making more and more money. But if there is a gap down, I will lose little of my profit, but I'm still profitable. Okay? Oh, 10. What time do you gonna see you next week? Oh, next week it will be at 8 o'clock. At 8 Eastern Time. And I will announce that 8 p.m. Eastern Time. And I might do Facebook also, because in Facebook I am not doing anything. I might do in Facebook also, but I am not sure. So you said I bought it at 106 and sold it at 116. Oh, that's good. That's very good. Now, let's see. Honorable said, margin call happens when you don't have enough funds to cover the short. Yes. Whenever you are losing money, okay? Because if you lose money, you lose money from your own money and from the broker's money. So it is double. And that's why you get a margin call. And it's worse. It's always bad thing. So when you lose a lot of money, the broker asks you to fund or to sell part of the trade. You bought 500 shares and you lost money. So you need to sell shares or to bring money. One of the two. Hazel, I'll be here. I want to learn new things from you. Thank you very much, Hazel. And say, if God wills, no one knows. Okay. And Hazel and everyone else, I always make videos daily. It means if you go to my channel, you find always a day. You can watch the video. If you have questions, you can send me an email or you can comment on my channel and I will go back to you. Okay? Honorable said some brokers will automatically close the position. Yes, sometimes you lose too much money and they don't know what to do. They call you, you don't take the phone. They send you an email, you don't respond. So sometimes they take action because they don't want to lose more money and they don't trust the market. Understand that the broker is not a trader. The broker is not a trader. He doesn't risk anything in his business. It's you that you risk everything. He doesn't risk. Okay? Vincent, you say my other winners for this week was Hey and Vive. Hey and Vive. Let's see. Oh, it's very good stock in aerospace. I have seen this stock before, but after the gap up, which is very good. Vive, I have seen this stock before, I guess. That's why I put the thing. I see it before, long time ago. That's good. Okay. Honorary said brokers love commissions. Yes. The biggest brokers, like interactive brokers, they are for day traders. It means they are not interested in guys who invest for the long run. They are interested for daily traders who trade a lot, okay, who have a lot of money, and this they can make a lot of money from them. So if you don't trade, you buy one stock in a month or a year and you invest. So they are not they are not interested in. Okay. So guys, it's 2 hours right now. A lot of questions, and thank you all of you guys, especially the new guy Doji, dude. He asked a lot of questions. Thank you very much for asking a lot of questions. And I always put what is it? I always put videos daily, and you can check. You can check my videos, and you can just watch them. If you see that you need more explanation, you can send me an email, or you can comment. Sometimes I don't respond that much very quick, but I will do everything. Okay, so it's 2 hours right now. Thank you very much, and see you next week. If God wills, it will be at 8 o'clock. I will see. Okay, I will always put a notification. Please put notification to your YouTube, because I make the live. I make it before. It means I do announce the live. So stay tuned. Thank you very much.